Hello, everyone. Jesse Webb, TradersPro. Market conditions remaining bullish in a bull market. We are at the upper end of that range. We're sitting now at 18.75 on the bull market rank, which is this line right here. This is a number that I've seen as high as 21, 22 is about the highest that I have seen that over the past few years. And so we're definitely approaching the extreme range on this long-term trend, as well as the short-term trend as well. We're seeing momentum, which is pushed back up into this extreme range. We also have seen a breadth, which has started to ignite here a little bit. We're seeing more participation in this last 2 or 3 or 4 days now that we had really for the prior month and a half. But not extreme yet, but we're getting some more participation, which could push things a little bit higher here as well, sentiment to the extreme. So we definitely are at that upper end of that range. Sentiment is sitting right at 79. Buy-sell ratio is right at, let's see if it's moved much the last day, 1.6, 1.59 versus 1.62 the prior day. Anything above 1 means that this green is above red right here, and that's ultimately giving you the bias, giving you the direction of the strength of the market. This is not, again, typically when it's a little bit wider, you're getting more participation to the upside. In this case, it's not as wide of participation. Nonetheless, it is still bullish slightly. If we take a look at a few of these indices here, we did see short-term bonds. Again, those are still talking points, long and short-term bonds. We're seeing these short-term bonds continue to pull back, which means those short-term interest rates are still holding or climbing slightly. Again, interest rates still could be an issue here moving forward. Bonds have also tried to make an attempted rally right here, but still kind of just stuck right here around this $92, $93 range. So if we can see if bonds start to move higher, that's going to pull interest rates, back down, and that's ultimately what the Fed is managing and dealing with inflation. And so we'll keep an eye on bonds. Not a whole lot of a move here as of yesterday. The prior day's move was a nice strong confirmation bar here, but not quite in that upward trend, that bullish trend quite yet on bonds. If we look at S&P 500, again, we're towards the upper end of that range. We're just beginning that extreme range. It's been a relatively orderly uptrend and downtrend. Really, we've only had, each time we had a couple of these big sell-off bars right here, they immediately reverse and return. So we haven't seen a crack yet in the trend, or a situation where we haven't seen buyers step in and on any kind of downturn. We'll see if we get that here soon, or if we just continue to kind of trend sideways over the next few days and weeks. If we take a look at some of the sectors here, let's see if those had any kind of changes the last few days also. Not really nothing happening there. A lot of these trends, we'll start to watch this side right here on all of these sectors that are bullish right now to start to see if we get anything that starts to shift down into some of these downtrends. Nothing as of yet. Commodities, we're seeing, saw a big move in gold here. We'll continue to talk about this, I think, going forward. I think this could be a pretty significant trend, as it is potentially breaking out of a long-term resistance area. About 5 years or so, it's been sitting right around this, bumping up against this range currently. So we'll see if additional money flies into gold, and if this is kind of a precursor to a move lower in equities, as money could be moving back into or moving into gold here as well, and as equities get a little bit oversold. We're still continuing to see lots of good things happening in technology and biotech, in semiconductor chip stocks, and builders. We're seeing a lot of things happening here across the board. Let's jump back and look at oil right here. We're seeing USO, see what it did the last couple of days. We talked about this range that it's in right here, and above this 73.56 range for some support. A little bit of a reversal bar yesterday, now that it's running up against that. So I'd watch this zone right here, see if oil continues to find some support and move higher. The new buy list, if we've got the Muscle Stocks Group new buy list, AMSC, this is in that electronics chip space. Those are anything to do with chips and storage and hardware and servers are continuing to do well just because of the AI bid, where you're just getting a lot of companies that are moving higher based on either anticipated buying of chips and hardware, a lot of those things for additional AI growth, or or that it's already happening. We're also seeing some gold stocks here. Harmony HMY had a real big move yesterday, and that could be a stock that is potentially breaking out of this 650 range and could see some upside, 14% move on HMY. I did see a few others, I think, in that list. They were maybe a little bit deeper in this list, but you're starting to see some gold. Here's AGI, which is a gold name. And a lot of them look like this. A lot of them are retracing back down and maybe starting these early trends in the beginning phases of that trend versus already in that momentum phase, which is what I prefer to look for. But nonetheless, when that trend starts to reverse and starts to take place, this is what the early phases of that start to look like. So keep an eye on some of these gold names as well, and still continue to do well with financials, with biotech. Not seeing really anything here in that group moving. We've typically seen a few CAMT also in that electronics space. So we're seeing a couple of other stocks in that world continue to do well. That'll do it for today's update. If you want to join me in my Discord channel for the Muscle Wheel portfolio, where we go through and we talk about a specific pick every day and manage a portfolio each day, there's a link to access that in the footer of this video. Look forward to having you. Have a fantastic day today.